What's up, millennials? Thursday, we're going to have the vote of SPAC Energy to see if they're actually going to merge with ChargePoint. Probably going to happen, but hey, you're not 100% sure, of course. So in this video, we're going to do three things. We're going to look at the market cap, the pro forma market cap of ChargePoint. We're going to look at its valuation as well. And we're also going to talk a little bit about what you could do before the merger and after the merger. If you don't know this channel just yet, well, it's a channel made for especially millennials, but also other people are welcome to join as well. And we mainly talk about SPACs, high growth stocks, some cryptocurrencies as well, technical analysis, valuation videos, so everything you want, of course. So if you like the content, please don't forget to subscribe. So for this video, we're just going to take a look at some comments that I found on Richard Allan's videos. If you don't know this guy just yet, he's a great guy. He makes great videos as well, quite a lot of videos as well. He does it a little bit like Meet Kevin, I would say. So multiple videos on one day. And he mainly talks about SPACs lately, which is of course the hot topic right now, right? So great guy, definitely check it out. This channel blew up in the last couple of months. He went from almost nothing to almost 50,000 subscribers within like 4 months or something like that. I'm not entirely sure, but yeah, his channel blew up for sure. So let me know actually if in the comments if you like Richard Allan as well, if you already knew the guy or not. I would definitely be interested in that. Okay, so for this video, we're just going to take a look at a few comments that I came across during the comment or in the comment section of Richard Allan actually. I don't want to make fun of people in the comments, right? I will try to give a little bit of feedback on those comments. I'm just trying to educate on this channel, right? I don't want to get into any fights, of course. So yeah, and of course keep into account that I'm not an expert, I'm not a financial advisor, so everything I say could be completely wrong as well. I'm just a random dude on the internet. I could be completely mistaken and you could be completely right, of course. So yeah, again, keep that in mind. I'm not trying to make fun of people. Okay, so one of the first comments that I found on Richard Allan's videos was this one. And Wall Street Goat says, well, 80% chance it'll go down, but ChargePoint is so solid, I'd like to see it go up. If Blink can be at $53 a share, $53 a share, I don't see why ChargePoint can't be higher. So I think here is something important that not a lot of investors actually look at seriously. A lot of investors only take a look at the dollar amount per share, right? They don't look at the market cap, which is more important. The thing is, the dollar amount can change basically anytime. The company can actually make the price change by, for example, doing a stock split or a reverse stock split, right? We saw that Apple last year did a stock split where they, I believe, went from like $500 per share to $125 per share. So they did like a 4-to-1 stock split, right? So companies like that can almost manipulate the price per share with a stock split or a reverse stock split. So that means that it doesn't really matter what the actual price per share is in dollar amounts, but it's more important to take a look at the market cap of a company. So with regards to that market cap, I also found an interesting comment from this person, Space, and he says the following. Here's what I think. Blink currently has a higher market cap than ChargePoint. Blink also has less than 1/3 of the stations ChargePoint has. So I guess by some metrics, ChargePoint is extremely undervalued, even at these prices. So the main point here is that he says, or she says, that Blink currently has a higher market cap than ChargePoint. And that is currently not the case, as far as I know. The thing is, market cap of Blink right now is, I believe, 2.2 billion. And the market cap of SPAC Energy, so the SPAC, is, I think, 1.6 billion. Now, many people think that ChargePoint is going to have exactly the same market cap as the SPAC, right? So they think that ChargePoint is going to be worth 1.6 billion because the SPAC, SBE, SPAC Energy, is worth 1.6 billion as well. But that's not the case. The thing is, the SPAC, in this case ChargePoint, or sorry, SPAC Energy, is only going to have around 10%, maybe 14% of the total amount of shares of the entire company. We're right now actually going to take a look at the market cap, the pro forma market cap, as they call it, of ChargePoint. So in order to get to that pro forma market cap, what I usually do is I look at the SEC filings, right? The documents that are filed by the at the SEC, the Securities and Exchange Commission. And in these filings, you're usually going to encounter a questions and answers section. And one of the questions is the following. What equity stake will our current stockholders and the holders of our founder shares hold in new ChargePoint, in this case, following the consummation of the business combination, right? The problem is there are multiple scenarios they pull up here. So they have multiple scenarios where they give you a breakdown of the amount of shares that are going to be outstanding after the merger combination, after the merger has been completed. You've got one over here, got another one over here, you've got another one over here, and you've got another one over here. It's quite messy, to be honest with you. And to be honest with you as well, I often don't even know which one to pick, right? It's never 100% clear what the market cap is going to be. It's never 100% clear how many outstanding shares there are going to be. But I'm going to try and give you a sort of answer. Okay, well, I'm actually going to take a look at an Excel sheet. So in this Excel sheet, I created 5 different scenarios. I was just talking about 4 different scenarios, but the thing is, even those 4 scenarios are different from the scenario in the investor presentation. Okay, so I already made a few videos about Switchback Energy and ChargePoint, of course. And I made several videos as well about the investor presentation. And during all my valuation videos, all my calculations, I took into account the amount of outstanding shares according to the investor presentation. Because they said, well, we're going to have 304.9 million shares outstanding after the merger, right? So ChargePoint stockholders, so the stockholders of the company that already exists, are going to have 245 million shares. SBE stockholders, so people like you and me who are investing in the SPAC, they are going to have 31.4 million. Then PIPE investors, these are usually institutional investors, people with a lot of money, they are going to get 22.5 million. And the founders of the SPAC are going to get 6 million shares, okay? Cool. Then you're going to arrive at 304.9 million shares, right? Well, the current price per share of Switchback Energy, which is going to turn 1-to-1 into ChargePoint. So the current price of Switchback Energy is going to be the exact same price as ChargePoint after the merger. If you take that current price per share of $41.22 and you multiply that by the amount of outstanding shares after the merger, you're going to arrive at a pro forma market cap, as it's called, of $12.6 billion. Okay, $12.6 billion. That's quite a big difference from the $1.6 billion we talked about earlier, right? So you can say, yes, okay, it looks like Blink is actually worth more than Switchback Energy or than ChargePoint, because Blink is trading at 2.2 billion, ChargePoint or SBE actually at 1.6. But if you look at the total amount of outstanding shares after the merger, you're going to see that Switchback or ChargePoint, actually, I keep messing this up, sorry. The pro forma market cap is already quite high at $12.6 billion based on 304.9 million shares. But just like I said before, in the filing, in the SEC filing, you can actually see multiple scenarios. Okay? Why are there multiple scenarios? Well, there are a few questions that are actually unanswered for everyone, right? One of those questions, for example, is, are people before the merger going to redeem their shares for $10 or not? Because before the merger actually is complete, people like you and me, stockholders of SBE, can actually decide to turn in our shares, sell our shares for $10. Well, I think no one is going to do that because currently the price is, of course, at $41.22, right? If the price were at $8, for example, then sure, I'll sell my shares for $10. No problem. But that almost never happens, right? It's almost never going to go below $10. So no one is going to redeem their shares. I can almost guarantee you that. Another question is, are the warrants going to be exercised or not? Now, as you might know, I'm not an expert with regards to warrants. If you want more information about warrants, then maybe check out the YouTube channel of Patrick. I keep forgetting it, or I don't keep forgetting his surname, but it's like Desjardins, Patrick Desjardins. Hope I pronounced that right in beautiful French. And he knows a lot about warrants. So if you want to know more about warrants, check out his channel. Okay, so that's also a question. Are the warrants going to be exercised or not? These are like options, right? The thing is, company, ChargePoint, can actually make people exercise their warrants if a certain condition or certain conditions are met. I believe if the stock is trading above $18 during 20 days, 20 trading days out of 30 trading days, I believe the company, so ChargePoint in this case, can actually make people exercise their warrants whether they want it or not. But yeah, we don't know if that's actually going to happen, right? We don't know if that's actually going to happen because they don't have to do that, I believe. Okay, another question is whether options are going to be exercised or not. We also don't know. So these 4 situations, and I call them situation A, B, C, and D, very creative, of course. These situations depend on the answers of these questions I've just raised, okay? So depending on what kind of answers you have, you could have 278.2 million shares outstanding. You could have 257 million shares outstanding. You could have 294 million shares outstanding. And you could have 377 million shares outstanding. Okay? I don't think anyone really knows what is actually going to happen, to be honest with you. If you actually do know, let me know. Definitely let me know. There are a few situations which are more likely than others, but I'm not going to go into that. But you can see that this creates actually a wide range of possible pro forma market caps, right? In situation B, you're only going to have a pro forma market cap of 10.6 billion. Situation D, you're going to have a pro forma market cap of 15.5 billion. So that's a massive range of options you have. It's probably going to be somewhere in the middle. I think it's going to be more likely to be situation A, more or less, maybe a little bit higher, but probably around situation A, okay? Okay, so the other thing that's very important is that after the merger has been completed, or actually, let me go one step back. During the vote of the merger, they're also going to vote on something else. They're going to vote if they want to increase the amount of authorized shares or not. Okay? I believe in the case of SWitchPack or ChargePoint, they are going to vote if they want to increase their current amount of authorized shares from, I believe, like 200 million to 1 billion. I believe that's the case, okay? Maybe check the SEC filings to be sure, but I believe that's more or less the case. What does that mean? Well, at some point, these authorized shares could be converted into outstanding shares, right? And when they're outstanding, that means that the market cap is actually going to go up as well. So let's say, for example, if they currently have, after the merger, 278 million shares outstanding. Well, let's say they double that. Let's say they issue 278 million shares extra, additionally, right? So that means that you're going to have twice as many outstanding shares. And that also means that your market cap is going to double as well, right? So then you'd have a $22.8 billion market cap, right? And then probably SBE is, or ChargePoint actually is quite overvalued. So what do you think? Do you think we're going to have share dilution or not? What do you think is the pro forma market cap is going to be? Let me know in the comments. And then another comment that I saw in Richard Allan's videos was this one from Mike Slate. He says, run up to $65, then pull back to $55, and then $70 to $90 by December 2021. I wonder if Lucid, well, that's about Lucid and the CCFE, so we don't need to talk about that. So he says it could actually go to $90 per share by December 2021. Can this happen? Sure. Why not? Right? There's a saying that goes something like this: the market can stay irrational longer than you can remain solvent. What does that mean? Well, it basically means that the market can do crazy things that you had never thought about, and you can stay there and keep holding the bag if something goes down, or you can actually lose out on a lot of money if something goes up and you hadn't thought that it actually was going to go up, right? Can it happen? Sure. Is it likely to happen? I'm not sure about that. I'm not sure about that. The thing is, I was like Mike Slate a year ago when I bought Hyliion. Not entirely a year ago, but like, I don't know, a little bit more than half a year ago, right? I was holding Hyliion. I think I bought in at like $25 per share. And it went all the way up to, I think, $55 more or less. And then the merger happened and Hyliion crashed, right? It went from $55 to, I believe, like $15 more or less, okay? When the merger happened, I thought that Hyliion was going to go to the moon. It was going to go to at least $90, just like Mike says over here. I was almost sure of it because it looked like a beautiful company. I liked the CEO as well. But in the end, it didn't happen, okay? And it turned out that Hyliion was actually way overvalued if I would have actually done a valuation for that one. But back then I didn't know about that valuation method just yet. I will say this though, ChargePoint does have multiple benefits compared to Hyliion, right? ChargePoint already has a proven track record. They already have lots of charging stations out there, especially in the United States. They have, just a beautiful company, right? So they actually have a product. They actually have, well, Hyliion also has a product, but at not so large scale compared to ChargePoint. So of course, ChargePoint is way better than Hyliion, in my personal opinion. If you disagree, then let me know in the comments as well. So definitely, ChargePoint is better than Hyliion. Probability of it going to $90 is higher compared to Hyliion as well. But is it likely? Let's actually go back to that Excel sheet. So a few minutes ago, we saw that with a price of $41.22, the market cap of ChargePoint is going to be around like $12 billion. Okay, let's say 12 billion to make it a little bit easier. That can change if they're going to issue more outstanding shares, as we just discussed a few minutes ago. But it's probably going to be around 12 billion so far based on this price per share. What happens if you say, okay, this is going to go to $90? Well, then you're going to see that the market cap of ChargePoint is going to go to about like $25 billion. $25 billion, that's quite a bit. I actually made another part over here. The thing is, if you have a $25 billion market cap, you're going to have very high price to sales ratios. What does that mean? Well, the price to sales ratio is the ratio of the price, which is the market cap, so how much the company is worth on the market, right? And the sales, so basically the revenue of a certain year, right? So then you have the price to sales ratio, so the market cap versus revenue, the ratio between that. Well, let's zoom out a little bit and go down here. So with a market cap of 25 billion with a B, and with a revenue, an expected revenue in 2021 of 198 million, as they put in their investor presentation, the price to sales ratio is 126. That's insanely high, okay? That's very high. In 2022, well, the revenue is going to go up, of course. So then you would actually have a price to sales ratio of 72, still very high. 2023, price to sales ratio for 41.5. And then this goes on and on. Of course, it keeps getting cheaper if you keep looking at higher and higher revenue numbers. But I hope you get my point, right? If you're saying that ChargePoint is worth 25 billion, then you're going to have very, very high price to sales ratios. Okay. So yeah, let me know, what do you think about this? Do you agree with me, or do you actually have a different opinion about this? And then some things you can think about before and after the merger, right? So we've already talked about a few things like the market cap, like the price, all those kinds of things, the valuation, of course. But you can also take a look at other SPACs that have already completed their merger, right? To see what kind of effect the merger vote or the merger date had on the price of these shares. So I already made a video about that. If you would like to check it out, then check out my video. It has a thumbnail like this one, so sell SPAC after merger. That's the one you should be looking for. And then you're going to find an analysis of 5 SPACs that already completed their merger. And the conclusion is basically as follows. The conclusion is that usually a SPAC continues to trade up and up and up until the merger actually happens. And then even or right after the merger or a few days after the merger is going to start going down, right? So that's what usually happens. This doesn't have to happen with ChargePoint, but it could happen, of course. So think a little bit about that. Think a little bit about, what you want to do with that, right? Maybe you want to add more shares when it comes down, right? Maybe you want to do something entirely different. That's all up to you because I'm not a financial advisor, of course. Okay, so I want to hear from you. What do you think is going to happen to ChargePoint after the merger? Is it going to go down? Is it going to go up? Is it going to go down to $20 or is it going to go up to $90? Who knows? And also let me know what you think is going to happen to the price of ChargePoint by the end of this year. I'm really looking forward to your price targets as well. So I hope you found some value in this video. If you did, please consider sharing this video with your friends who are also investing in SPACs. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye.